It's crazy out there. Tweets, Trump, Fed, and now a trade deal with Japan? What's up, everybody? Welcome aboard. It's Bubba's Bottom Line, and here we are. It is Sunday. Geez, the month is flying by quickly. August the 25th. Well, I guess there's been some news over the weekend from the G7 that the U.S. and the U.S. and Japan have made a trade deal. What does it mean? You could see a little bit of a pop tonight. I don't think it's as big as if it was with China, but we'll see. Again, there's no way to know for sure how the markets are going to react. I mean, we saw some wild action last week, and markets went crazy. And of course, the Fed did their usual. They did nothing. They did not do what we would consider really to be the right thing. And again, as you know or do not know, I'm not a fan of the Fed. I'm not a fan of what they do. I think that they're totally clueless to all of everything that is monetary and how a true free market system works. But this is the destruction that the Fed and every other central bank around the world has created as we continue to watch the plummeting of interest rates. But unfortunately, in this case, because central banks have control of their economies, because they can reduce interest rates, because can raise as well, because the U.S. has the ability to create more cash out of nothing. This is where you start to see the problems, because now, instead of the free market deciding what's going to happen, you have individuals deciding what's going to happen next. So in this case, if you're going to compete with the other central banks in the other countries globally, okay, then the only way that you can do that now is to bring down your interest rate to stay somewhat competitive, because of, if I can borrow over there for zero, okay, and I can deposit it over here for 1.5%, I'm going to make that trade, okay, and these are things that happen when you do not have a true and honest free market. Okay, this is again the issues that are created when you allow them to manipulate currency and interest rates. The currency wars, they've been going on forever. They've been reducing your buying power for 106 years, and of course way out of the scale of what the original mandate was. But this is some of the stuff that you see. And of course, I think there's a heck of a lot going on underneath the surface here. And with a potential trade deal with Japan, I don't really know how to interpret it right now. I mean, the news basically just came out. And again, it can't be bad. And I think there's not going to be a reduction, supposedly, on the autos, from Japan. But again, we'll see how it plays out. Certainly, it might create a little pop in the grain markets. I mean, the grains have been so depressed, looking for a reason to pop. This could be something that could help them get out. I think they're going to get out. I think you also saw the tweet storm about Jerome Powell. Now, again, people may not like the way that President Trump handles the situation, but I do personally believe that the way he sends out the information, you may not like it. Okay, it may create you some investing heartburn or some trading heartburn, but I believe that it's nice for the president to communicate with the public with what he's thinking. Now, again, I have no problem with it. I don't know. I've obviously I haven't been for every president, but I've been around for about 15 of them, and I think that at the end of the day, okay, I don't think that any of them done much. And they try to hide too much information versus putting it out there. And again, I don't have a problem with it. I'm sure many do, and they call it not presidential. Whatever. You're entitled to your opinion. That's the beauty of being American. I have no problem with it one way or the other. I think it makes life kind of interesting. But again, I think that the way that he's been blasting Powell, that's one thing, because Powell really doesn't have to listen, of course, and Powell is basically guaranteed his job. He can do it. And I think this is something that Yellen did a few years ago, and they didn't do it right away because of the administration trying to overpower him. So basically, they said, well, maybe we'll wait a little bit longer. I mean, but the indexing and the bond pricing is telling you that there's going to be considerable rate cuts coming. Now, whether the big thing here, I think, is the September meeting going to be 0.25%, or is it going to be or 50 basis points or a half? Okay. Again, will they succumb? You can never get a true read because they don't speak in normal English terms. Okay. They speak in roundabouts, and we never really know how accurate the information is that they're reporting. So it's the same as government reports when they come out. Now, let's be clear. The Fed is not part of the government, although the name was originated to make it sound like it was part of the government. But when you get a government report, we don't really know how accurate they are. We don't know the numbers, because if they were accurate, why are they always being adjusted? Okay. So you never know what manipulation goes behind closed doors. I can't say that there is anything happening, but from my point of view, it certainly doesn't make sense the way that everything always it's adjusted, it's changed. I'm not sure. I don't know. So we'll see. Again, I think that the China trade deal, I am 100% behind the president here. I believe that we need to stand firm. I loved what he said about the fentanyl, and basically, he cannot command them not to go there, but certainly President Trump could create it where it would be cost prohibitive for them to use things out of China. So we'll see. But on the other side of the coin, as we are importing from China, our good prices are actually either the same or potentially lower based on the overwhelming strength of the U.S. dollar and the manipulation that China has done with theirs. They have accounted for the tariffs. So our real problem comes into our exports. Okay, that's where the issues have arisen. So again, I love how these companies are preparing you for higher prices, yet they're not paying anymore. And again, I've heard some say, and I can't get a true read, but I know one thing about simple math. Okay, if the yuan has been reduced by 20% and the tariffs are 20%, and the U.S. dollar has risen, okay, because of the fall, then the exchange should be zero. It should be a zero-sum game. So we'll see what that looked like. I mean, again, there's a lot of things going on. There's not a great answer, but one of the great answers is not to continue to bring in more stimulus. Okay. Now again, they keep talking about more money. Why would we want to put good money after bad money? I mean, basically, the Fed's got $4 trillion into this recovery as it is. Now, we finally start to see some signs of growth, and there's some issues going on, but why do we want to put more money? And it's like a bad business. So if you run a bad business and you keep putting money more into it, what is the likelihood you're going to get out? Well, there's no likelihood. The probability is probably zero. So why do we continue to go down the same path? And this is one of the issues that I have with this whole situation. Okay. I mean, again, if we continue to try to stimulate out of false money, okay, that becomes a problem. Now, as far as tax cuts, I would love to see more tax cuts, okay? But what I'd really like to see is what I don't understand, okay, is if you look around the United States of America, okay, the 4 highest tax states are California, New York, Illinois, and Connecticut, okay? You get ripped off to live there. Now, I live in Illinois, and I can't wait to get out, but of course, unfortunately, I've got some issues that keep me here. But why is it that not only those 4 states, the highest tax states, but they're also the states that are continually in financial trouble? So where does it come that those states, not only they screw you for living there between income tax, state income tax, real estate tax, every tax, gas tax, yet they're always bust. Okay, how does that work And then you look at Texas, states like, Nevada, Texas, Arizona, Florida, that flourish with no taxes. So where does the equation, where's the fair and equal balance here? And I think everybody should take a lesson from what goes on here, because again, we need to get, obviously the debt. You see the debt clock. I mean, the numbers are so wacky. But at the end of the day, isn't it time that they stood up and said, "Okay, we're going to stop spending so much money on garbage"? Okay, it's again between everything they do, it's like there's a never-ending supply. But of course, that's why they're trying to get to basically almost a digital currency, so that nobody really knows what you have. It's almost comical, which is again, we're going to make up the strength, and I think bring the cryptos even farther into space. Okay, closer to the front line. And I think that's what you're going to start to see here a little bit, because you've got a lot of things going on that just are so illogical. And it's amazing that the decisions are being made by, Princeton, Harvard, Cornell, Columbia graduates that are supposed to be the smartest in the world. It doesn't look very smart to me. Now, again, I don't know. I'm not an economist, okay? But I certainly think I could do a better job than the economists that are talking about it now. I mean, Paul Krugman's still calling for a recession, 35% higher. So in the meantime, when are we going to legalize pot? You want to solve some problems in this country? Legalize pot, okay? I mean, it's legalized in I don't know how many states, but when are they going to put it right through the Fed, okay? Federal government approves it, boom. What does that do? A, it opens up a whole new chain of businesses. B, it brings in all kinds of dough, all kinds of tax money, all kinds of things that will help stimulate everything. Okay, then it brings a whole investment community from the outside who can't invest in it now because it's not legal. And of course, then it brings the money back into the banks. You can see these guys, they don't get bank accounts, they have to carry their cash around. So there's so many things that are so simple. This should be the Congress and the Senate should be run by a fifth grader, right? Are you smart enough to be a fifth grader? Because certainly the things that we look at show that obviously they're not smarter than a fifth grader, because there's so many easy solutions to fix this that I don't know why it can't be fixed. But that's really the way life goes, right? What can we tell you? In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz for Sunday, August the 25th. We're going to stop out here for a break. We'll be right back with more. What's up, everybody? Hey, yesterday did a great hedging webinar. If you'd like to catch the recording, just email me at bubba@bubbatrading.com. It's free. I'll send it out to you. And of course, don't forget about our equity portfolio recording we have as well. You can have that one as well. Email me at bubba@bubbatrading.com. In the meantime, don't forget about our high school investing program. As the kids are back in school, you can help us out at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me. Welcome back. It is Bubba's Bottom Line. It is Sunday, August the 25th. And again, what a week for the markets. How about that roller coaster? And is it over? Is the rally done? Okay. Are the tops in? I don't know. I can tell you this, which we say, we give you our position every time we talk. We're short, okay? And of course, we suffered through the rally, okay? Now we're short, and obviously you had a little bit of a benefit. But again, basically, when you look at the markets, when you look at the charts, what did you see? You saw basically a market that failed exactly where we would have expected to fail from, right from the top end of the range. The sell-off itself was not a surprise, and I don't know why anybody's so surprised about it. Yeah, it happened to happen on Friday after it was down. Last week was very well, down, up, thin volume. But Friday, when Chair Powell spoke, okay, and of course then President Trump went crazy on the Twitter sphere, okay, and of course the markets fell apart. Now, again, you can say it's because of that, but again, we had established the resistance level. Just like now, I would not be surprised if they went a little bit lower and came back to that support, because for the last 16 days, they've been trading within that range. So why would I expect today and this market to be different now? Because they're never different. Now, again, eventually, we're going to break outside of this range one way or the other, okay? Now, is it going to be tonight, tomorrow, next week? I don't know. I just know that we watch that consolidation pattern, which is all we're really in, big, wide, sweeping consolidation. And that's what we see in the markets. And until it gives us a firm direction on which way it wants to go, we will, we use the algorithm, so we're staying short, okay? And if we have to, we'll change, okay? But in the meantime, there is nothing to talk about change, okay? It is what it is, and when you finally understand that that's how the markets really work, and quit trying to play the news and all the other crap that goes on out there, you'll find out that the patterns and the footprints play all the time, okay? They don't get old. So I think that's one big thing we have to make sure and understand. In the meantime, gold continues its drive higher, and it was interesting as it churned in consolidation. Very much, blew off to made a big recent 6-year high on, I don't know, Tuesday or Wednesday, whatever it was, and then last week, and then churned, and then all of a sudden, bang, zoom, right from support. Was it the announcement or was it the technical pattern? I don't know. You make the call. But to me, I was already long gold, as we were, based on the pattern. So I was dressed for that party as it exploded up $30. Okay. So those who tried to catch it on the way up probably didn't do very well. So again, this is what you look at. And I write that for Kitco every day. It's not like it's a secret. It's not like I had this special secret sauce. I wrote for it every day. Am I always right? No, we're not always right. Okay. That's the point. But understanding the probability of what's going to happen based on the pattern that you're looking at, it ain't that hard. Okay. And again, the hardest part is for you to pay attention and keep your emotions out. But we're going to talk about that in my commentary. In the meantime, oil, do nothing. It's churning. It's kind of spinning around 55. Okay. Up a little bit, down a little bit. We're long, unfortunately, because I hate being long oil. It's still in backwardation. It's still, to me, it's still being driven by fear. And I think, as we look at it, again, we're long. And again, obviously, I don't know which way it's going to go because the pattern says it doesn't know which way it's going to go. So we'll continue to watch and see. But I think one thing I meant to mention in the first part of the show, and I'll talk about now real quick, is the backwardation formation that oil's in is bearish because when the front month, okay, or the near term is more expensive than timeout, is not the correct recipe typically. And I think when you can hear them continue to talk about the inverted yield curve, it's not that big of a deal. We've been talking about it for months, okay, long before it came to the forefront here. We've been talking about the yield curve forever, okay. So that it was already inverting. So this is no big deal. But all you have to do is remember is when most markets, especially financial markets, go into backwardation, which means that the shorter the term or in interest rates, the short-term rates are more expensive than long-term rates. That means there's fear because people are pouring their money in, which creates more of that fear, and it kind of feeds on itself. If you look at the actual curve itself, nobody talks about the 1 week you can get almost 2% on a weekly basis, okay? So you're going to put your money away a week at a time at 2%, or do you want to put it away for 10 years at 1.5? That makes sense to me, right? So just remember that will help you more. And of course, as we look at the grain markets, just a pretty rough week for the grains. Not brutal, but I think now it looks to me that wheat was the first to bottom. Now we're still short grain, so before I give you my bullish opinion, I'm still short. But wheat finally looked up, made that bottom. It finished the week up strong. Soybeans, on the other hand, looked like they finally filled the gap on the lower end. They finished up weak, but again, we wouldn't be surprised if they were able to come back from here. And corn was moderately weak, and again, hovering around 360 in December. Corn is pretty crucial. 845 or so in October. In November, beans would be some pretty critical areas we'd be watching. And of course, we do have a bullish opinion long term, but again, short term, we will continue to play the system, the model, because that's what I do. We trade mechanically. And of course, we've got the meats, which, it looked like hogs are going to finally bottom. And boy, did they bottom? They reversed bottom. They tried to get out and got back into consolidation and got clobbered. Okay, again, from a straight trading standpoint, I would be a buyer just for a trade. But the algos are still shorted. Feeder cattle reversed to long, and of course was down pretty good on Friday. But again, that won't affect our long-term rate. But again, we like the cattle markets here a lot. I think they've done basically exactly as we have scripted from a technical pattern, both making extreme lows off of the Tyson fire news, both rallying back. Feeders much faster than live or fat cattle. But overall, excuse me, looks pretty solid. And then, of course, again, obviously you can't predict the future, but it looks to me that they want to now make a run, at least to their upper ends of their range. So I think that all looks good. The dollar continues to be strong, although it did come back down a little bit late in the week. Again, the Fed continues to try to keep pressure on the dollar, as are the other central banks around the world, which tells you, again, I said it earlier today, I'll say it again, how ridiculous the whole central banking system is, okay? Because, again, it would be my opinion that the free markets could settle all of the rates and what they should be versus having somebody decide, well, we need our currency to be cheaper because we need more exports. Again, this is a game of manipulation, okay? And to me, it just doesn't have the logic behind it. So as we watch, and we continue to see interest rates fall, which when there's fear money rolling in, they're buying bond futures, higher price bond futures, lower interest rates. The Fed's going to cut. There is no question about it. And of course, you've seen Bitcoin start to hold that bid. Get down back as low as, 9,500, 9,000. It's back over 10. Looks like it wants to go higher. And again, I don't see any again, I do believe that, again, I've said this for quite a while, that I do believe the cryptocurrencies are real. I do believe they're going to be something. Now, whether it'll be Bitcoin, which one it'll be, how it's going to work, I don't know. But I do believe that this is going to be very common, especially as not a true stored value, but a stored value type of business. Okay, of using, I don't know that it will compete directly with gold, but it will take some of gold's money that would normally might go into gold. But in the meantime, I think they're going to be real. I think they're going to continue to run. And I think we're only scratching the surface of the crypto age, as this is almost like a rebellion type of thing. Again, this is not a revolt. This is not a fighting war. This is a financial war that I believe you will start to see more money and more money start to flow into these. And I think once you get more of these ETFs and more of these government products that are regulated, okay, then you'll see a much bigger action, and that may clear the way for the big move up. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break, and we'll be back with more and my commentary after the break. Well, yes, we did a great hedging webinar, and of course, would have been nice for everybody to hedge going into Friday, but no big deal. It's never too late because the markets are going to bounce again. Again, don't ever believe that there's this major panic. So if you'd like to check out the recording, just give me an email, Bubba at bubbatrading.com. I'll be happy to send it to you for free. There's no charge. And of course, you can check out our equity portfolios. And if you'd like to help us with our high school program, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line with me and my commentary. Welcome back, everybody. It is Bubba's Bottom Line for Sunday, August the 25th. And of course, it's always great to be with you. Football season's here. And, we got college football started yesterday. Great game between Florida and Miami, Florida. But again, one of the things I always take issue with, you've heard me talk about some of the fear mongers out there and some of the BS out there and some of the dirty, underhanded things that go on in the industry of recommendations and stuff like that. Everybody's always chasing the next shiny object because of some ridiculous advertising. But what I really want to talk to you about today, and what bothers me, is that we do predominantly mechanical trading, which is algorithm based, very similar to the Turtles and Richard Dennis. And of course, if you've ever heard of John Henry from the Boston Red Sox, the owner of the Boston Red Sox, you can read their quotes, but they're both saying the same thing that we say, okay? If you can follow a mechanical system without emotion, you're going to have falls and it rises, you're going to have drawdowns. You're going to have losing periods of time, but you cannot change the system. And we show, we've shown and use a system that, hits a good percentage, about 66%, but yet everybody wants to change the rules. And this is the problem when you're trading, you're investing. This is what creates the meltdowns in markets. It's not it's the emotions that take over, and which is why it's so much easier to become a mechanical trader, so that you can flourish when it's good, and when it's not good, you are set up. Remember, if you're using a mechanical system that is trading both sides of the market, okay, then you're long when the trend is up, you're short when the trend is down, you miss portions here and there, you have drawdowns, but you have to stay the course and play the probabilities. It's like if you were flipping a coin 1 billion times, okay, most likely it's going to be about 50-50. But if you try to outguess it, sometimes you'll be 70-20, 70-30, 80-20, and sometimes you'll be 0. So again, if you would learn, and this is for yourself, not for me, but if you would learn to focus on the rules and rule-based trading, mechanical investing. In other words, don't be panicking out like on a Friday. I was on Charles Payne, and one of the advisors said, well, this is a great time to buy. I said, well, I don't think it's a great time to step in and buy. I said, I'm not selling regardless. But what I'd wait for is I'd like to see the action Sunday night, because you know how those typical things. So remember, it's your money. Take care of it the best way you can. Don't fall into the trap of trying to outguess the market, playing the news, okay? Follow the rules. Have a trading plan. Be prepared, because at the end of the day, the stock market itself, good companies, the markets in general, go up 8.5% year over year. So if you're following something that has a high percentage of win, okay, and you follow it to the T, then you're going to get that percentage of win. If you try to change it, you're going to change the dynamics and change the odds. And never has an investor or anybody been able to successfully change the truth of what real numbers are. They will only cause you to lose your money. So protect your money, protect yourself. Have a great weekend. This is Todd Bubba Horwitz, Bubba's Bottom Line, and we will see you back here tomorrow on Bubba's Daily Update and throughout the week from Baltimore and New York. And anyways, everybody have a great week. As always, I thank you, and tonight's opening should be interesting.